Good afternoon, everyone, and welcome to Stock Market Today, sponsored by Interactive Brokers. It's Thursday, August 29th, and we are live from the Investors Business Daily Studios in Los Angeles. On today's show, we're going to be taking a look at a gap up on Burlington Store's earnings, also some support that Microsoft saw today as it forms a base, and a Chinese e-commerce company, Pinduoduo, that broke out. But first, let's take a look at the major market indexes. It's Justin Nielsen along with Ed Carson, and it looks like we had a strong showing today. The NASDAQ Composite was up 1.5%. The S&P 500 looks like that closed up about 1.3%, and the Dow Jones Industrial is about 1.3% as well. The Russell actually outperformed Russell 2000 at 1.6% today. So, of course, it's a very different market from when you went to bed and wrote your futures column last night, and shame on you for going to bed and not realizing what was going to happen today.
That's right. I had to neglect my cat, say, no attention for you. I got to rewrite this column at 3:30 in the morning Pacific time. And it was China came out and basically they said that they want to have a calm attitude, and they signaled that they wouldn't retaliate to Trump's latest retaliation in this escalation. So that turned futures, which were down or going nowhere, to up 1%, and the market rallied from there and actually closed near session highs. The S&P and Dow both rose above the highs of Friday's level. We'd sort of been range bound. I mean, the NASDAQ almost got there. They're still all between their 50-day and 200-day line, so it's not like a radical change.
Right.
Market's still under pressure. There's a few breakouts, most of those earnings related.
Yeah.
It's nice. It was nice to see something. I mean, it's
up is better than down.
Up is better than down, and obviously the news you could see a negative headline, and it would just go right back to down. So it's hard to make too much out of this.
Right. And just to be clear, it's not like the problem is solved. It's it's just, we're still in talks, optimism, and that optimism has been there before, and it can quickly get the rug pulled out from underneath it. Yeah. And so as you mentioned, we are back kind of coming up to those 50-day moving average lines on all the major indexes, and that's going to be a big test, the 8,000 level for the NASDAQ, so we'll see where we go from here. Now, you mentioned earnings, and retail stores, specifically the discounters like Burlington, had a pretty strong day.
Yeah, it was a little mixed. There's definitely some losers on that front.
That's true. But some big ones.
There were some big ones. So Burlington Stores came out with better than expected earnings and sales and guidance. And boy, this stock gapped past its 50-day gap past the traditional buy point. So you could buy this on the opening price. I don't recall what that was, like 194.31, something like that.
Exactly.
And it was put on IBD leaderboard today. It has a little bit of accelerating earnings, a couple of quarters of accelerating sales growth. So this was positive.
Yeah, and so just to kind of put that in perspective, the opening price was 194, which a lot of people might have said, oh my gosh, that's way too high, it's gapped up too far, but it closed at around 205. So it had a good move from that even high level. Yeah,
I mean, earnings gaps can show real strength. They are very volatile. I mean, and so you have to be very careful about that, but it's safer than maybe buying ahead of earnings because, this one rose, 14, 15%, but it's like Ollie's Bargain Outlet fell like 25, 27%.
Yeah.
So that was a miserable experience of that. Meanwhile, Dollar General, it also had a similar action. It gapped out, similar move on earnings. So mixed action, but a couple of nice breakouts in this space.
And now if you look at like a retail ETF, a lot of those are still, way down in the dumps, but it kind of just goes to show how sometimes there's individual stocks within a sector that are doing something a little bit different, and in this case, the discounters in a lot of cases are, still got the improving earnings, improving sales, and maybe have a better story.
Yeah, and when you combine that with Walmart and Target, there's actually a lot going on in the discount space. It's pretty strong. The U.S. consumer is still doing relatively well.
Exactly. Okay. Now, a lot of people might be looking at their portfolios and saying, okay, why didn't my stocks go up as much? Why didn't I feel like I was up 1.5% like the NASDAQ? And now if you look at Microsoft has a big weighting in the NASDAQ composite, over 7%, and that just got back above its 50-day line. What's going on with Microsoft?
Well, Microsoft, today there was a analyst for Wedbush Securities who came out and said that that Microsoft is closing the gap with Amazon Web Services. There's a lot of they seem to be hitting the trends like hybrid cloud computing. They're really doing well. A lot of partnership with corporations, so they've scored a lot of wins. Really strong growth in that area, and this has just been a steady winner. There's that blue line, the relative strength line there. That's sort of been slowly going up, for quite a while. The relative strength line actually hit a new high today. After tomorrow, it will have a new flat base, assuming it stays within this range, which is likely because it's still sort of in the middle of that range. There's a lot of stocks like that. A lot of stocks rose above their 50-day lines today. A lot of stocks like Lululemon. There's a whole bunch of stocks that are going to have basis after Friday. So that's encouraging because we haven't had a lot of leaders except for a few earnings gaps kind of things. So.
And so that July 26th was kind of the high, and so a lot of stocks are going to be forming almost the same exact bases. The ones that were the strongest are the ones that are kind of those flat bases with the higher relative strength lines, and those might be the first ones to watch.
And that's really the thing. This is why we always say don't, be careful in a correction or a market uptrend under pressure, because the situation is that most stocks follow the market.
Yeah.
Like the stock market peaked on July 26th. There's a whole bunch of stocks that peaked and some are forming bases, some are underperforming, but there's still that general tracking the market.
Now, let's go ahead and shift our attention to a Chinese stock. Now, Pinduoduo is an IPO from a year ago, and it had a pretty deep base, but it looks like it's breaking out from about a 3209 entry if you use that cut base. But this has been running up for quite a while now.
Yeah, it's a deep base. It's basically been going straight up since mid-July, gapped up again after earnings last week and kept on running. So those are all reasons where you might be thinking, well, they might be running out of steam. It could always run out of steam very quickly. I mean, there's a short position, there's a short squeeze presumably going on, and maybe this will keep on working and keep working, but you don't know when that inevitable pullback is going to come, and so it just makes it harder when you have going straight up from the bottom from a deep base. There's just some reasons to be worried, especially with a China stock where you never know if people start worrying about the Chinese economy. When that earnings enthusiasm fades, you might see it come back down.
Right. Now, the short squeeze on this one is a little bit important. So let's go ahead and talk a little bit about what a short squeeze is exactly.
Well, when there's a lot of shorts in a stock and then it starts running up, the shorts have to cover, or they cash out before they have to cover,
or they panic.
They panic, yeah. And so the stock that adds to buying, they have to buy back the stock, and so that adds to the buying pressure, then flushing out more shorts. Obviously, it's a constant give and take in that front. But there was I don't want to be saying it's bad on China. There were actually a lot of things going well with China because of the positive news. Alibaba, the big e-commerce giant, that rose above its 50-day line. So there were some positives going on above and beyond this Pinduoduo.
Right, and just for perspective, as of July 31st, it looked like there were 7.8 days of short interest in this, and that's taking the average volume. So how many days would it take to cover all of those shorts? And that's a lot. So, okay, that's going to do it for us today. A few things that you should just be aware of that we have available for you for more insight into the markets. We have our investing strategies show that Allie's been doing out in the NASDAQ in New York, and that dropped again on Monday, and we'll have another episode for you this week. So that's at www.investors.com/investing strategies. We also had a podcast that dropped today. That was Arusha with Howard Lindzen, the founder of StockTwits, and it was what I'm told is a very, very good podcast, very amusing. Howard is quite the character.
He is quite a character, and he's talking about 3 Dow stocks. So there's some really interesting stocks that are performing really well. So you might want to take a look into this.
Yeah, and so that can be found at www.investors.com/podcast. And don't forget to follow us on social media. We are on Facebook, YouTube, Instagram, and Twitter, and you can interact with our reporters, you can interact with investors.com, and share ideas with your fellow investors.com readers. That'll do it for us today, and we will see you right back here tomorrow. Thanks for watching.